In this video, we will cover taxation associated with mutual funds. This is a very important topic and taxation needs to be thought through at the point of buying and selling funds. Capital gains taxes are paid on the gain from an investment. Mutual funds themselves do not pay any capital gains taxes when they sell securities. Investors are liable to pay capital gains taxes when they sell units. If sold at a loss, capital gains losses can be carried forward in some cases. IDCW, or income distribution cum capital withdrawal, which was previously called dividend, is the money that is periodically given back to the investor, and this is also taxable. Tax may be deducted at source if the IDCW payout for a year exceeds Rs 5,000 or upon a sale if the investor is a non-resident Indian. Stamp duty and securities transaction tax may also be applicable on investor transactions. Let's discuss capital gains taxation in more detail now. Capital gains taxes do change frequently, and the rates shown are applicable in fiscal year 2024 and 2025. As covered in the previous video, equity-oriented funds are those that have more than 65% of their assets in stocks. Debt-oriented funds are those that have more than 65% of their assets in fixed income. And those funds that don't fit into either bucket fall into other funds. Equity-oriented funds incur the lowest amount of taxes. There is an exemption amount of Rs 1.25 lakhs and a holding period of 1 year. Capital gains rates of 20% would apply if the holding was for less than a year, and 12.5% would apply if the holding period is more than a year. Other funds are next with a taxation rate of 12.5% of gains if held for more than 2 years, and income tax slab rate if held for less than 2 years. Gains from debt-oriented funds are taxed at income tax slab rates regardless of the holding period. Taxation is lower on equity-oriented securities as there has been a systematic push to bring in new retail investors into the equity markets. Considering taxation on mutual funds is extremely important when buying or selling funds. Taxes should be paid quarterly with advance tax payments to avoid paying interest on the delay. As tax rates change frequently as part of the annual budget, it is very important to check with your chartered accountant the actual amount to be paid. Capital gains reports can also be obtained from the registrars of the mutual funds to help determine the tax that is payable. I hope that this video was helpful, and do feel free to reach out at the email address or mobile number provided. Do visit my website www.aditshah.in. Links to my social media pages are available there. Do follow me in case you found this video to be beneficial. Thanks for taking the time to view this video. Take care. Bye.